We had another rough day in the stock market today, guys. We had the S&P 500 down 1%. We had the Dow down 1.5%. We had the Nasdaq 100 down 0.4%. And don't ask me how, but the Russell went up 1%. So today, you guys know the drill. We're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, check out my Patreon, link down below if you guys want all my buy, sells, call outs, morning update videos, plus more. And you can get your 5 stocks from Webull, which is limited time, and your $50 from M1 Finance. All of that, the Patreon, the free money, link down below. And with that being said, let's get into it. So SPY ended up taking out the 460 double bottom low that we actually held last week. Or actually, was that earlier this week? Yeah, that was earlier this week. We ended up taking that low out, as you guys can see on this intraday chart. Let me pop it up. We hit 458 in the morning. Then we saw a lot of choppiness throughout the day as the VIX was up. Let's see here. The VIX was up about 5%. So the fact that we broke under that low that we actually held earlier this week, we broke the channel that I talked about earlier in my earlier video here on YouTube. That is not good whatsoever for the bulls, right? And we did get a little bit of a relief rally at the end of the day. We did see the markets move up a little bit here in the pre-market as well, or aftermarket rather. If I show you this intraday chart, you can see we are up a little bit, but overall we took the lows out earlier in the day, so that's kind of building more momentum to the downside. So for next week, I'm not saying we're going to collapse now. The little rally that we saw yesterday to all-time highs after the Fed meeting, I'm not saying this is over, but it's worth watching. You know, if we stay under 460, there could be some more downside, maybe to the low from, the beginning of this month, which I believe was right around 448. And same thing with Triple Q, right? Let me pop that up and show you guys what I'm seeing here. Triple Q, well, actually, it's a little bit different. Triple Q held above the, bottom of this uptrending channel that it's been in the 20-day chart, on the 20-day chart. So that's a good sign. I mean, if Triple Q broke under the low from the beginning of this month, that would not be a good sign. But let's see a second. Hold on. Let me see on this 5-day chart what's going on. Actually, yeah, we took the double bottom low out from earlier this week. That was at 383. We hit 381. So this, even though it did rally for the rest of the day for the most part, it closed at 385, which is a good sign. Now we're at 386 after hours. Even though those are good signs, we did build a little bit of momentum to the downside today as we did break under 383. So I'm going to say in general for Triple Q, watch 383 next week. If that level breaks again, like it did this morning, and we take the low out from this morning, there's a good chance we're probably going to hit that low from 2 weeks ago, beginning of this month. Very, very possible. In fact, I think it will happen if we break under 380. So keep that in mind for Triple Q and SPY. Seriously, guys, watch out for those levels. So now let's talk about some stocks. And by the way, if you guys are finding value, make sure to hit the like button and subscribe. It really helps me out overall in the YouTube algorithm. And we're trying to get 25,000 subscribers by the end of the year. I'm not sure if we'll be able to do it. Who the heck knows? But we're shooting for that goal either way. So stock number 1, DRI, Darden Restaurants. They went down 5% on the day. They reported earnings this morning, and from what I saw, the earnings were pretty solid. Let's break them down. They did $1.48 EPS versus $1.43, so they ended up beating EPS, which is great. Can't complain. And when it comes to revenue, $2.27 billion versus $2.23 billion estimated. So double beat for Darden Restaurants, and they raised their full year 22 sales guidance from 9.4 to 9.6 billion. That's what it was originally, to now 9.55 to 9.7 billion versus the 9.54 billion estimated. So they guided above the full year 22 sales estimates, which is great. And they see, what's it here? Actually, no, this is not guidance. This is what they did. They did Olive Garden same-store sales up 29%, Longhorn 31%, and I want to see the number here for all of them together. I saw it this morning. Here it is. Same-store sales up 34% for Darden Restaurants versus the 32% estimate. And they're doing better than they did pre-COVID. Where's that number? I saw same-store sales were up 9% versus pre-COVID or something like that, which means even though COVID slammed a lot of restaurants, these are bouncing back to levels higher than pre-COVID, which is good. That's a good sign of recovery. Here it is. Oh, actually, no. Excuse me. They didn't do that already. That's what they expect for full year 22. They expect full year 22 sales up 9 to 11% versus pre-COVID, which is great. I think that's phenomenal. And they own a lot of restaurants that you guys know. Olive Garden, Longhorn, I think Capitol Grill, Yard House, and a bunch of other ones. So these locations are snapping back. Very strong. So keep an eye on DRI. We're towards the bottom of the channel here on the 4-hour chart. If we hold above 140, which is roughly where we are now, we might end up seeing some sort of rally. So watch out for that. ANET is another one that I'm looking at, Arista Networks. This one's very close to the recent high, so keep that in mind. But I'm looking at this more as a momentum play, right? We recently broke out from 120 to 140. We hit that high, pulled back to about 128, a little bit of a profit taking, which is normal. And now we saw another pop above the 50 moving average, telling me that, hey, this rally overall might not be over. We might start gunning back up for that 140 high, maybe even higher. I mean, today we did go up about 4%, which is very, very good news. A good sign from a technical perspective, right? So keep your eyes on Arista. This might be going higher. Ticker symbol ANET. And I've been getting so many questions on ZIM, guys, because they have a huge dividend right now, about 20%. A lot of people have been commenting about it, and I didn't do a deep dive by any means on this company, but I just looked at it because whenever I see a company paying a 20% dividend yield, it worries me a bit. And I did make a video this morning, and in the beginning of that video, I go over for a couple of minutes what I look out for and what I'm, kind of nervous about when it comes to dividend stocks. Go check it out because I go more in depth about that in that video. But overall, when companies have a 20% dividend yield, red flags go off in my head, right? I'm like, this probably isn't sustainable, right? And for ZIM, from what I saw, they're a shipping services company, right? Which at this point in time, they are doing very well from my understanding, right? They're making a lot of money, and the PE ratio is a 3 because they made so much in EPS and the stock price is only $50. So they're making a lot of profit right now, which I don't think is going to be sustainable, from what I saw. And if that EPS number drops, think about it. The stock's $50 right now. Let's say EPS was like 17, I think it was, or something like that. That's a very low PE, right? But if the earnings go back down to, let's say, $2 EPS, if things die down, now we're talking a PE that's a lot higher, if that makes any sense. So I think from what I just briefly saw, I'd be very careful with this one because the dividend yield could be very high just due to having a good quarter or two. And if they start failing again, or not failing per se, but they have a couple of bad quarters in a row, I guarantee you that 20% dividend is going to come down to, let's say, who the heck knows, like a 1%, 2%, trust me, I've seen this happen all the time. So from a long-term perspective, there's no way I would buy this. I mean, there's no way. For me to buy dividend stock, I need to see a long track record, history of them paying a dividend, growing the dividend, and I need to make sure it's not just a one-off thing, right? So for long-term, I'm not touching ZIM, but the chart, I'm not going to lie, looks pretty good, right? I'm noticing an ascending triangle on this 4-hour chart. You guys can see clear resistance at about $60, and we've been uptrending since pretty much all of this year. Higher lows, all that good stuff. Now we're just squeezing deeper into the triangle. So I think from where we are now at $50, we could break up even higher here. I think if we take the moving averages out at about 52, I'm going to put my alert right there. This is going to end up going crazy, in the short term. But again, this, for me, would be a trade. Nothing more than a trade. I would not touch this long-term because I don't want to say for sure the dividend's going to come down. But from my experience, 90% of the time, 95% of the time, when I see companies with a high dividend, my red flags go up. and they end up cutting it at some point. It's just not sustainable. But who knows? I could be wrong. I don't want to tell you guys what to do, but I'm just saying be a little bit cautious, right? So Moderna, you guys know the cases of you-know-what have been going up recently. So Moderna stock has been kind of taken off again, since the beginning of this week, or about a week ago, last Friday. The stock's gone from 230, now it's almost 300 again, and there's a big resistance coming up at about 300 as we're now trading at 294. We're almost there. You guys can see I have this drawn out. 300 roughly was support in the beginning of October, right? Also recently in the beginning of December before we collapsed under it. So I think if we take 300 out for Moderna, this is probably going to start going crazy again. Maybe, I don't think it's going to go all the way back up to the recent all-time high necessarily, which is kind of far from here. I mean, $500 is another 40% higher, but could it go to, 375, 350? Absolutely. That was the levels we were just at in October and in the end of November. So watch out for Moderna. Draftkings is another one that I'm just watching and buying. This is one that I've been buying for a while, and I'm continuously buying it. And I'm noticing a clear-cut head and shoulders on the 3-year chart, which is pretty bearish, but I don't think it has much more to go on this right shoulder, to be honest. I mean, this stock has just been decimated. It is down almost 70%. Actually, I don't want to blow it out of proportion. More like 60%. But still, that's a lot. 60, 70%. I mean, that is a lot either way. And it's just been down so much in the past couple of weeks. There is going to be a rally at some point. And, I might be wrong on the timing of that rally, but I'm not here to time it perfectly. I'm just going to be buying, averaging in. And the closer we get to 20, the closer we are to a bottom, in my humble opinion, guys. Seriously. And I'm noticing a bullish divergence already here on the 4-hour chart. RSI strengthening as the stock has been going down. So that means we might be seeing a move in the short term, but for us to see a complete reversal, obviously, we have to break the moving averages, which we haven't done that yet. But overall, again, I'm just buying this dip, holding on. I believe in this company, and I'm doing options on it, selling options on it, and been making some good money doing that while I just wait for the share price to appreciate, right? And I believe they just got upgraded, for whatever that's worth, by maybe Goldman Sachs. Here it is. Yeah, Goldman Sachs adjusted Draftkings price target to $63 from $66, and they're maintaining a buy rating. So, hey, even though I don't listen to analysts, right? Or, I mean, sometimes I look at their reports, whatever, but I'm not making a decision based off them. It's good to see that they're putting a buy on it, and I am buying DraftKings actively at these levels. So what do you guys think? Drop me a comment down below. These markets have been pretty crazy, and we've been selling off recently, mostly due to big tech. I mean, if you guys noticed, Apple is down about $11 from the recent all-time high, which in other words is about 6%. So a 6% hit in Apple, that's going to bring the markets down. We have Google down a decent chunk over the past couple of days. It's down about 4%. Let's see Microsoft here. What's that been doing? I haven't been watching Microsoft that much. Microsoft, yep, that's down a good chunk. Microsoft's down about 6-7%. So these big tech names, I've said it again, I'll say it again, or I've said it before, I'll say it again. You know what I mean, right? These big tech names control the friggin' markets. The big tech names and the Fed. Once you realize that, you're going to be in a better place. So I'm going to wrap it up here. Hope you guys had a great weekend. If you did, or have a great weekend. If you did have a great week, hit the like button. Make sure to subscribe and let me know your thoughts down below in the comments. And check out my Patreon if you want all my moves in the markets, all my buy, sells, call outs, morning update videos. All of that's linked down below. And don't forget to get your 5 stocks from Webull. All you have to do is deposit any amount of money using my link. And same with M1 Finance. Use the link, deposit $100 with them, and you get $50. So check all that out. Link down below. I'll catch you guys in the next video. Thanks for watching as always. Keep crushing the markets. Stay safe out there. Peace out.